G'day traders, Greg McKenna here, 15th of November. A really interesting night last night. It was Brexit shenanigans in the early hours of my morning, late evening in the UK, and just during the trading day in the US. We had rumours when the cabinet meeting was on that it wasn't going to get passed, and then of course a deal's been done. 2/3 of the cabinet seem to have passed it. So we've seen, or I've seen this morning so far, I've seen sterling under 129 and then up in the high 130.70 region. It's just under 130 at the moment. Euro and the Aussie went on their run like that. The Aussie actually traded up to 72.50 odd this morning, which makes no sense really, but hey, that's what's going on at the moment. And Euro was substantially higher as well, but it still can't get up through that 113 sort of 50-60 level that it needs to get if it's going to run to the 114s. But the question I'm asking myself, and I'll talk about this all the way through, is if the tail wagging the dog of the US dollar is Brexit, and if a deal gets done, does that mean we're going to get caught, or that US dollar longs, everything else shorts, are going to get caught the same way oil traders did? We'll have to keep an eye on that going forward, but there's still plenty of water to go under the bridge. Stocks were down again, still under pressure, really struggling. The Dow down another 0.75% to 2,700. It looks like it's in trouble. It looks like it's going to trade the new lows, or two lows, and then possibly new lows. You know my view, medium term is going lower. Dow had a 600-point range. It was down more than 300 points at one point, finished down 200 at 25,080. Nasdaq 100 lost 0.9%. Apple still under pressure. 6769. The Russell 2000. I know some of you out there trade the Russell 2000. I've got some feedback on that. So wait until I show you a chart. It's also in markets morning. It fell 0.26%, but it's had a death cross. That's the 50 and the 200. Now, normally, the death cross is not something I talk about, but we'll talk about that today because other people watch it, so it's important. 2 minutes in, I'll get the skates on. Back to currencies. The Kiwi did well, up 0.4. Bitcoin got hammered. Do you remember yesterday or the day before I said Bitcoin's slipping? And then we looked at the chart and thought, oh, maybe it's not. But it slipped. It did. It must have been something that I was just feeling about Bitcoin, but it's collapsed. It's at risk now of running to 3,400, 3,500, maybe even 3,000, which is where I have been targeting. It's on Reuters, it's at 5,500. On my machine, there's a $200 gap, but that's, anyway, finishes down here. I'll be looking at 3,000. Gold caught a bid, oil found support, copper caught a bid, and also silver's the word I'm looking for. Right, let's go to Brexit first. Let's go to sterling. That's the big one. So what have we got? If you go and have a look at the 1 hours, you can see this up and down kind of feel. But the best thing to do, and one of the reasons why I'm perfectly placed time zone wise, is that one turn of the clock does tell you. So one rotation, market opens in Sydney, closes in New York, opens in Sydney, closes in New York. Apologies to the Kiwis, but the official open of foreign exchange is actually in Sydney, not New Zealand. Anyway, so you've got that wild day. What does it tell you? It doesn't tell you anything really, but it gives you a wide range. If we get up and through 130.65, then we can run to, I think that's 131.65 or thereabouts. If we come back down below 129, then we've got support here. The reality is, as I said yesterday or the day before, or I've said a few times, options is the best way to play this. Right here and right now, 130, you've got 7 up, maybe 10 to 12. You've got 3 down, maybe 10, depending on which way it goes. Now, volatility is expensive, but that's what happens. You pay for vol. But you use it you buy an option with enough time that it'll give you time to make some of that money because you use the theta. Anyway, we'll talk about that when I launch the service for the Platinum Club. Euro, what have we got? 130.55.60 is the key here. If we can break that, it can run to 114. If you're short Euro, if you're short Aussie, if you're short sterling, there could be some pain coming if some of these levels start to break. Obviously, in the Aussie, we've got the data out today, but you can see, this is just, first signal was wrong, second signal. Oops, lost my mouse. Let's just see where it's gone. Sorry about that, folks. So we'll keep an eye on that. I'm not bullish. I'm a US dollar bull, right? Medium term. But just for the moment, some of the setups, they could reverse. Where's the battler? The Aussie, here we go. Oh, I forgot the yen, didn't I? What do you got here? This is really interesting. Let's drill in so you can have a look. Actually, look better on the 4 hours. So I'll drill out again. So, you know, we've got little upsloping thing here. You probably have that. It's probably a channel, but I don't want to put too many more lines on it. Actually, it's not, but that'll do. Right, so maybe let's call that the channel. Although I know it's cheating, so you can see that this sort of, for me, 73.15 is the key level to watch. But you can see it's gone up, it's come back to the 50% roughly, held there. 71.65 remains support. It didn't get back there last night, unless or until it breaks 71.65. It's probably going to head back towards 73. If it breaks 73.15, it's going to head to 74.40. I've got to do dollar yen. Come on, click. There we go. Right, so rolling over. If stocks continue to fall, then dollar yen will probably fall. If dollar yen and gold continue to hold a relationship that they've got on a 30-minute basis at the moment, then gold should hold a bid too. I haven't got a chart for you because it's over here on my Reuters or whatever it's called now, Refinitiv or whatever it's called. And they are moving not in lockstep, but they have a reasonable correlation. So to me, if we get down through 113.30, call it 30, give it 7 points, then we've got 113 figure. So 113 figure 30 is support for me. If that breaks, then we're looking for a substantially lower move, 100 to 200 points for dollar yen. Of course, that goes counter to any idea that the US dollar is strong. But the reality is that it needs catalysts. Last night's CPI, headline CPI on top of the headline PPI last week, both support Fed Chair Powell and the Fed's hike in December and then more hikes next year. Now, of course, people are extrapolating, well, if we take out oil and the core CPI actually fell last month, even before oil collapsed, well, heck, maybe there's no problem. That's kind of the thinking that goes behind why the US dollar was weaker, even though the CPI was strong. So you can see how that kind of worked. For me, dollar CAD, keeping an eye on that. So we're really not going anywhere here at the moment. I don't have anything in that. I'm just going to say 136.70 is support and 133.20 is resistance, and it might be topping. If we break either side of last night's range, 132.63 or 132.07, not a very big range, you might get another 60, 70, 80 points on the basis of that. The Kiwi, yesterday I suggested we were heading back towards here, and we have. That, if we take out 68.5, that would be very bullish for the Kiwi. I wouldn't suggest that's going to happen. But if it does, that would be very bullish for the Kiwi. In terms of commodities now, gold, you can see this is that trend line, you know, start, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, break, get back above, but held 11.95 as I suggested yesterday. What does that tell me? Not a lot really. 11.95. If 11.95 breaks, then we get bearish, 11.83, 11.60. And if 12.17 breaks, which is the convergence of these two moving averages around that level, plus that old Fibbo, then we can run back into the 1230s. Gold's, when I did my correlation analysis on Saturday, the 35-day correlation between gold and stocks had broken down after the October funkiness. But if we're going to get more funkiness from the S&P 500, then, and other stocks obviously, then gold should probably do well. It is starting to get a bit of a safe haven bid. So keep an eye on that one. Copper, it's basically just respecting this this little pattern here. So you know, 264 is for me the key level to watch. But if you wanted to trade the break, the level today is 265.75. That's obviously HGC terms. In terms of oil, inside day for both WTI and Brent. Huge build, API build of 8-point-something million, just monstrous, absolutely monstrous again, which reinforces this whole idea. Now, in Markets Morning this morning, I've written about how the way that the Saudis and OPEC are trying to run oil reminds me of the Australian Wool Board, which a long time ago collapsed. And I think the issue for the Saudis is that fundamentals matter, and fundamentals drive commodity markets. But as you've seen in copper, and there is tightness coming into the copper market, but as you've seen in copper and its collapse, its ramp to 320, whatever it got to, and then collapse to 250 something as the low, what you've seen through that is that the financialization of, so that's people like us trading, the financialization of a commodity renders fundamentals less important than they would otherwise be. Now, if you've been brought up trading the Aussie dollar like I am, you're completely au fait with other drivers that are not necessarily fundamentally based. You are completely au fait with other drivers that are market-based, sentiment, positioning, all those kind of things. Comments from the president, the lack of waivers, or the lack of actual sanctions, and lot of waivers. All of those kind of things come into play in a manner that OPEC doesn't like, but the Russians get. I'm convinced the Russians get it. Listen to Alexander Novak. So what have we got? It seems like we did have a liquidation event. It seems like some of the big players had hedges with banks, and those banks were holding those hedges, clearly thinking price was going up. And once the price kept cascading lower, they had to hedge their own positions from holding the corporate hedges, so the real money flow, and to do that they had to get out. So the corporate or the oil producer had sold forward, they were holding that, they bought forward, prices started to collapse, they've got a delta hedge, oh heck, we've got some to sell. That's what Goldman Sachs are saying. So what have we got? We haven't got a signal to buy, but recall on the weekly, this level across here, this 55, 45 or whatever it was, call it $55, is a key level. So if it holds above that for a while, you'll start to see the MACD come back together. You'll start to see the momentum come out of the market, and then you'll start to see a rally. For the moment, though, we just wait and see. Inside days are not that exciting. Same story for Brent. Right, so across here, roughly, it's a different story because it's not the same story, as you know. But it's a similar story. Overall, if you look at it on the weeklies, it suggests prices are going lower. So we'll keep an eye on that. In terms of stocks, let's go to stocks. I'm just going to make this ugly for a sec. I should have lined this up earlier, and I do apologise. But what I'm going to do is I'm going to see if I can, here we go. I'll find that Russell 2000 death cross picture for you. Should come up now. Is it coming up? There it is. It's there, I just can't see it. No, it's not it. Let me, oh, there we go. It's going to be it. There we go, right. So, Russell 2000, last 12 months. Right, so, it's probably gone too deep. And probably with the S&P too. It's probably gone too deep to say this is the start of a massive head and shoulders. That's a shoulder, that's a head, that's a shoulder, but we need to get back up here. Now, that's the case for a lot of stocks. But what we've got and what people are looking at, this is from Bespoke. I got this off Twitter, by the way. This is Bespoke Investments. Brilliant, brilliant follow if you are a Twitterati. Follow Bespoke. They've got some good charts. It got a death cross. What does that mean? That means it goes lower. That means people's psychology is going to change. Now, these don't always work. In many ways, I've always preferred a 3 moving average kind of cross. But still, 50 and 200-day moving averages crossing over is a very important signal for many people. So the Russell 2000 does look like it's going lower. Sorry, let me get rid of that. Right, oops. Right, back to where we were. All right, here we go. So see what I'm saying? This would be the lowest you'd want this shoulder to go in S&P terms. So what have we got? We got 1, 2, 3, right? So it needs to hold. 2685, 2684 really, really needs to hold. Have a look at my Twitter feed. 2 tweets ago, I said stocks traders, time for an adult beverage or something like that. That's about what a fellow I follow, I assume it's a fellow, could be a girl, has put out about the S&P futures. If that level breaks, I'd be saying 2,600. Ultimately, I think 2,500. But let's just say for the moment, the downside pressure remains. 2684 has to hold, remembering this is a futures-based CFD. It's got to hold, and if it holds, then things can start to recover. If 2684.85 breaks, then things are going to get ugly for the S&P. And as Tom Keane likes to say on Bloomberg Surveillance, and for global Wall Street. For the Nasdaq, this looks like a full round trip. This does look like it's heading for a full round trip. Apple's still under pressure. If Apple's still under pressure, it's got weighting in both big indexes. Then that's going to drag on the S&P. Peak Apple does seem to have happened. Now, I bought a new phone recently, the facial recognition one. It's great, but it's not worth what I paid. And, you know, in many ways, a 6 or a 7 or an 8, much cheaper, are just as good. So that looks like it's going to continue to come under pressure. In terms of the local market, had a big fall yesterday. 5723, so let's call it 5720. 5720's got a hold. We closed at 5745 in SPY terms. Not far off in terms of the physical terms. So watch the SPY. 5720 gives way, then we're all the way back at 55, sort of 85 to 5600. It's got a bearish outlook. We could bounce today. It might be good news. Who knows? I didn't talk about silver, but silver respected its levels too. Now, obviously, we need to talk about Bitcoin because it's falling out of bed. Where is my Bitcoin chart? A Bitcoin chart. I'm not sure it's the Bitcoin chart, but it's not the Bitcoin chart. So let's just... Right, so what do you got? If you have a look at it on a weekly, you've got a bubble. Right, that is a bubble. That is as bubblish as bubble gets. Right, so now if you look at it, if you do high-low rally, right, roughly, right, that says 1900. I know you can't see that. If you use this one, so high-low sell-off rally, then it says 3000. So we are breaking lower in Bitcoin. If it closes the week below 6,000, that's going to be a game changer, I think. On the day, I want to see it close below 5650, which is what I've talked about for a very long time. This could be a head fake. It could be about Bitcoin cash fork tomorrow. Who knows? I want to see a day close below 5650 before I get uber bearish. But the chances are growing that is what we see. Righto. That's it from me. Australian wages, sorry, not Australian wages, Australian employment today is the big number. We've got retail sales in the UK and the US as the other big ones, and Chairman Powell speaks today. So it's a volatile time, particularly if you're currency trading because of the Brexit stuff and the impact of sterling. So like the Sergeant used to say in Hill Street Blues, which was one of my favourite shows of all time, let's be careful out there. You know what that means, risk-adjusted positioning. Anyway, oh, one thing. What a Rush, I think it was, asked what was the thought bubble I had that I stopped. I was going to say the only thing guaranteed in trading is that if you risk control, you won't blow up. But then I went on to the other side of it and said, but I know people that never risk control and make money in spite of themselves. So that was the completion of that. That was at 8 minutes and 14 seconds, I think, yesterday. Anyway, catch you tomorrow. Bye for now.